Curiosity is a superpower. If you're still doing the same thing that you did 25 years ago, I hate to say it this way, but shame on you. You should have been constantly adding new arrows to your quiver so that you wouldn't be bored, and you're continuing to add more value than you did before.
Thanks for tuning into On Target. I'm your host, Matt Tarka, partner at Concentric Wealth Management. Before we dive in, a quick reminder. Today's discussion is intended for educational purposes only and is not intended as investment advice. You can find our full disclosures at the end of each episode. Let's go ahead and get started.
Welcome back, everyone, to our second episode. I'm your host, Matt Tarka, partner and director of portfolio management at Concentric Wealth. Just a couple minutes, we're going to be joined by our founder and owner of both Burke CPAs and advisors in Concentric Wealth, Mr. Patrick Burke, CPA and Esquire, should note. So, double whammy there. But as always, let's start.
Doubly boring,
double the education. But we're going to go ahead and get started here. We're going to talk about markets, what's going on in the last, 30 to 45 days in markets. How are markets thinking about things? How are they reacting to the recent news, geopolitical tensions, earnings? So right now, the core theme in markets is they're grappling with this concept of potentially higher inflation or a shock to inflation from the energy crisis. That seems to be unfolding on a minute-by-minute basis with the Strait of Hormuz and the flare-up with the war in Iran. You're seeing that, in March, the headline inflation on CPI was about 3.3%. Here in April, it was about 3.8%. So we are seeing inflation tick somewhat higher here from everything going on. And I think the Fed is starting to ask the question of, do we hold rates, or, some folks out there are talking about potentially one small rate hike at the end of this year. We're not in the camp that we get a rate hike, but I don't think anything's off the table with this situation. It depends on how long everything's going. Overall, the Fed wants to see inflation at a 2% target. The economists and philosophers of the world may say, well, is 2% really the rate we should be at? Should be at closer to maybe a 3? We're a big economy. So growth, does it look differently now than it did 30 or 40 years ago when they came up with that number? The Fed is still cautious. A couple of weeks ago at their meeting, they held that target range, and Powell came out and said that he is going to watch, and that the Fed is going to watch and be cognizant of any risks to the system. That near-term inflation has risen. They're acknowledging that. And where does that all play through the system? That's really the big question now. Growth has held up, though. Even in light of this, the consumer continues to spend, the economy continues to grow. The advanced estimate for the first quarter GDP reading was 2% annualized, which is a clear acceleration from where we were before. We're seeing that April payrolls ticked up 115,000 jobs, and the unemployment rate is holding steady at that 4.3% mark. That hasn't materially moved in nearly a year and a half or 2 years. It's healthcare, warehousing. You're seeing gains in certain sectors. Even retail is gaining jobs. Bonds are being pressured, however. Higher oil prices, the inflation concerns, they're pushing treasury yields slightly higher. They're depressing the prices a little bit. That's really the biggest stressor, right? The biggest stressor right now in markets is geopolitics. I think, Pat, we both read the news and we're both students of the news. That's driving the conversation right now. What happens with Iran? What happens with Israel? What are we seeing with China now? It seems like there's some flare-ups in the South China Seas again for the nth time this year.
Well, we're sending our A team over there, so that
we are,
and a bunch of good capitalists. So we'll see how that works out with the CCP.
Stocks, equities. It's been a strong run since the depth of I'll call it the Twitter beef between Iran and the United States with President Trump and everything that's been going on there. 80% of companies in the S&P 500 have beat revenue growth targets, earnings targets, and they've also had margin improvements. So even with the inflation shock that's hit the system here with energy prices, that hasn't hit companies yet. On top of that, we're compounding with the idea that you're going to get significant refunds from companies who had tariffs from Liberation Day. That's going to be money that just hits the bottom line for these companies. So I think that from an equity standpoint, so it was really interesting. I was in Boston a couple of weeks ago. I was meeting with the folks at State Street. We use them. Great people, incredibly smart, great insights. And, their term for the year is uncomfortably bullish. And I think that's a pretty fair statement. This is a market environment where, kind of in their own words, where there are so many things that should be pushing against markets. It's actually helping and pushing markets forward and pushing them higher. So I think it's, technology, AI is trumping kind of the whole geopolitical situation right now. But I think investors are somewhat cautious. Markets are pricing in this resilience, but they could be underestimating the impact of this energy hit to the system. Maybe too much enthusiasm around AI and software, and you're seeing maybe some of these talking heads on Wall Street coming out and saying the same thing. AI semiconductors they've run up maybe parabolically.
So it's interesting to me when you know that the energy prices, it's not a systemic thing, it's associated with an event, and that people can't see past that. So you think they could, and I mean, it's not up to necessarily any of us to tell the American consumer to, tighten their belt and let's do this right, but kind of that's what's happening, right?
Yeah, absolutely. And then when you think about the kind of dynamics in the crude oil markets, right, this is really a granular piece, but the big question is West Texas Intermediate WTI crude versus Brent. Why is WTI so much more expensive? We got plenty of supply here. Our bunkers are full. We can't, we got so much oil coming out of the ground that we can't get it through the pipelines fast enough to get it.
I saw Diamondback and some other folks are doubling down on their exploration.
Absolutely. Natural gas exports. We're now a net exporter of natural gas. But I think it's such that the rest of the world needs the oil that they can't get out of Iran. They can't get it through the Strait of Hormuz. Why were some of these countries, I figured out how to build a pipeline as fast as possible.
I guess they're doing that.
They're trying. Yeah. They're trying.
That doesn't happen overnight.
No. It's even if you build a pipeline, it takes a while. And getting all these ships through, you've got the two straits there. It's I think it's going to be an interesting summer if you've got a road trip, but definitely tighten up your belt and save some money for that, because I think it's going to be a costly road trip.
Maybe it should be on a bicycle.
Take those little e-scooters around.
Yeah, there you go. Don't go far.
Now I'm going to introduce our owner, managing partner of Burke CPAs and Advisors and Concentric Wealth Management, the brainchild behind both brands, 50-year business steward, entrepreneur, also owner of ProTem, HR and recruiting solutions, multifaceted board member for both nonprofits and businesses alike. Brings a girth of experience to the table.
It makes me sound a lot better than I am.
No, I think you've built such a great firm here and such a great culture. It's a real honor to introduce you to maybe some folks that live out of town and maybe have not met you in person or heard you speak before. So Patrick Burke, again, CPA Esquire, owner of Burke CPAs and Advisors, owner of Concentric Wealth Management, board member, community activist, philanthropist, Politico, a little bit of everything. And so today's specific.
Don't forget drummer.
And drummer too. He is in a band. He's in a band. Bourbon Brothers. Got to make sure you will listen to him or see him coming into a city near you.
Yeah, probably not, but we do have a couple of things on YouTube. But yeah.
But today we're going to be discussing Pat's 6th book that he's written, and it's entitled How to Be a Business Warrior. It's going to be hitting Amazon and various shelves this summer. And I know that this is one I think this is really a passion project, like a mea culpa for you, because there's so many pieces in it. And I got to read an advanced copy. So again, we'll be getting copies out here. We'll put a link up when it comes in is published. You got, what year did you graduate college? I thought I want to ask.
Yeah, 1977.
1977. So you are on your 49th year of true business, but you've been working since you were 14.
Yeah, I have started off mowing lawns and begging, as we all did, I think, and begging groceries. But yeah, I worked part-time I worked for a CPA firm right after college, and then part-time during law school, and then started with a CPA firm right after law school when I decided to follow the honorable route and go to accounting versus law. For all the lawyers out there, sorry, but no, I'm obviously kidding. My brother and dad were both lawyers, so I came by it naturally.
So, you talk about when you started with the accounting firm out of college and you were working there part-time, and one day, July 4th, 1984, I believe it was, maybe a couple weeks before that, you woke up and said, I no longer want to be an on-staff accountant. I want to be an entrepreneur and a business owner. What was, that's a large step. And what was going through your mind at that point?
That's not very much. I think, probably if I were to be honest about it, I was probably injected with a mega dose of irrational exuberance, with all due deference to Alan Greenspan. Yeah, I thought it was interesting because the firm I worked for was very decentralized. So like the first week I was there, they gave me a stack of whips. It was like, here, these are your clients to bill. You're in charge of this. And so I would, after 4 years of doing that, I thought, well, if I can do that for them, I can do that for me, which was, and they gave me a lot of great experience. And I thought, maybe I can't handle General Motors, but I can probably handle the clients that would be foolish enough to follow me. So, as I mentioned to you, with a $15,000 budget and a 2-page business plan, and a wife who had a job as a freelance, but she was doing very well, and 1 child and no savings, off I went. So it was, looking back, it was probably misplaced confidence, but it worked out. So somebody was asking me about this the other day, and I said, well, I think 1956 was the largest birth year, and I'm 55. So, we're the football inside the python, right? So it really was much easier to get a business started then, and there were a lot of people my age starting businesses. They didn't know enough to go to somebody better than me, so I was the beneficiary of that sort of lack of business acumen.
Over the 50 years you've worked with thousands and thousands of, we call them owners, but they're really operators. They're folks who are in the arena working on their own businesses, trying to start them, scale them, grow them, exit them. How has kind of your perception of risk from the time you said, I'm going to go out with this startup budget and this 2-page plan, how has that perception of risk changed over your 50 years? And how do you coach the CEOs that you work with and the businesses that you work with on, kind of this intelligent risk-taking framework that you have today versus maybe 40, 50 years ago?
Yeah, that's a great question, because I think that if there's one thing that sets successful entrepreneurs apart from the general population, if you will, is their ability to assess risk, really just sort of flip the coin. And, I always say that the average person, they may not eat risk for breakfast, but it doesn't get to the lunch menu. It's gone by then. And sometimes you got to put some parameters around them, or they'll take, almost any risk. It's like, and I'm sure you've seen it in what you do. If you try to get a true entrepreneur to buy a balanced portfolio, he's going to say, no, I want to do nothing but trade options. So you got to be careful about their exuberance. Most of the time, what I see is entrepreneurs are very confident in the value that they add to the business that they're operating. And they feel like the risk is in my favor because I know what I can do that maybe my competitors can't do. So, and sometimes they're right, and if they're right more often than they're wrong, it works, Otherwise, they don't have a business anymore, right?
Yeah. And kind of to your point with the concept of the business warrior, and we'll kind of define maybe in your definition what the business warrior is and is not. Business warrior is not the bare knuckle brawler, although some people liken business to this, combat, Sparta 300 style. It's really not. It's being almost like a Renaissance person, a polymath, a knower of many, always curious, always learning, always trying to build and improve themselves. I think there was a story in the book about your first warehouse job where it was raining one day and you started sweeping the floor, and your boss came by, started looking, and obviously said something to everyone else, and then everyone was sweeping the next time it was raining there and there was nothing else to do. So maybe talk through what is your that framework of being that business warrior.
Well, I think capitalism is being maligned today, and I think it's wrongly so. And it's been my experience over all those dealing with these hundreds and hundreds of entrepreneurs, is there's a significant vein of good that runs through them. Otherwise, don't get me wrong. Every once in a while you do run across somebody who's successful, notwithstanding the fact that they're kind of a flaming jerk. But that is way the exception that proves the rule, for sure. I don't think you can be a good leader of people, a good inspiration, a good mentor, unless you understand, the people who are working for you, why they're doing it. And if you don't care about them, they don't care about you. And this was years and years ago, and I don't want to be pounding my chest, but when my now retired partner came on board, and after about a month, he said, these people will run through a wall for you. Why is that? And I said, because I love them. They know that I care about them, and it's not just a transaction. And I think too often people think that every business owner is all about himself or herself, and they don't care about the people. And it's just, it's been my experience that that's exactly not true. And which is why the subtitle is going to be, how to be a business warrior, and in subtitle is, and it's not what you think.
Yeah.
So.
Yeah. And it doesn't seem like it is, because when we think about the culture that you've built here, and you were kind of pointing to this. I think culture is such an important aspect, and what we think about here and how we view employees and owners and partners and staff alike is, when you're here, you're family, and I think that you've built up a great culture. I mean, maybe some people might argue against that sometimes, depending on the day, depending on the tax season, but you speak to finding some. Kind of like your wife, just like with my wife, there are a support system at home, and they bring out the best in us at home. What do you find is that key to bringing out the best in people at work, in the office, to bring them whole selves to work so that they are firing at all cylinders and helping push the ball forward?
Yeah, that's a great question. And I wish I knew the absolute answer. Probably, I understand, to my previous point, what is their why, and a lot of their whys start off as, I just want a job, right? And then the why might move to, hey, I want to keep this job. Then the why might move forward to, hey, I'd like to do better at this job. And then it might be, hey, I'd like to have a career. And then perhaps later, hey, I'd like to be a partner here. So if you can sort of push the person across that continuum, gently, and I think they get that. They understand when you're trying to help them. And I think it's the old story of praise in public and criticize in private, and don't be afraid to catch somebody doing something right. I think I mentioned in the book that there was a young lady that worked for me that wrote this beautiful letter to a client. Growing up in a household where I had my dad was a judge, my brother was the editor of the Law Review, my two older sisters were English teachers. So if you mangled any kind of tense at the dinner table, you got a fork, stuck in your index finger. So I just said, hey, that's a great letter. Nice job. And it was pinned to her, her little corkboard in her cubicle for 2 years. And I thought, okay, so what you think you're whispering, your employees often take that as a shout. So you be aware of your effect on people, and don't be afraid to praise them.
And I think, you do that great here. You really, we as an organization, I feel like, I hope we exemplify that.
Well, you hope. I mean,
we do.
Occasionally you fall short.
Yeah.
That's everybody.
That's the life of business.
That's right.
You kind of talk about developing staff, and a key point that you lean on in the book throughout the entirety of it is you're constantly learning as a business owner and operator, and always expanding your mind and trying to find new avenues. But over 50 years, obviously, technology has changed, clients have changed, markets have changed. And this is something that we had a junior staff person ask me on the wealth management side. So I'm going to ask you this question because I thought it was really deep and insightful. What's something you had to learn, unlearn, or relearn throughout your career that has improved, or maybe not improved, some aspect and some outcome?
Well, notwithstanding the fact that I was around all those writers and grammarians, I think sort of being a better communicator, and I think that it's, I don't know if this is 100% responsive to your question, but I was told a long time ago that I tend to be a bit blunt, and I always thought they were just kidding me. And the older you get and you start watching other people and how they interact with people, I understood that I was perhaps overly blunt. Then I think I probably leaned the other way a little bit too. It was like, well, maybe sometimes somebody has to be told that this isn't really working out the way we thought, and either you can change your ways or you become an alum, and so that's has nothing to do with technology. It just has to do with knowing yourself, which I think is, after 50 years of dealing with people and dealing with people that I work with, I think that those would be that would be my learn, unlearn, learn. So if I think that was responsive.
And, it was interesting in the book too, and there's so many great stories. So I'm really excited for everyone else to read this book too, because
I hope so.
It was just interesting to learn more about the man, the myth, the legend here. And there was the story of the chemical company that you had in there, and you this was a company that you and your brother they came to you, sought out capital, you invested them. They actually lived in the same space that Concentric now lives in. So when we see the deformed rats in the basement, I'm kidding, we're deformed rats in the basement. But part of that was
They're quite healthy, actually.
They're huge. They're very big when you see them. When you were going through that exercise and you met another chemical company and they were saying, there's a lot of splash in this space. That was someone who probably on the right side of the equation was telling you, hey, this isn't a good thing to be invested in. And you and your brother said, hey, you know what? Heck with it. We're going to keep going on. So what have some of your failures taught you about your own ego, listening to the right people? And I just think that's really, we've got such a diverse group of listeners, from young professionals to seasoned partners at firms to, retired business owners, and kind of everything and anything in between, employees, owners, homemakers, the whole gordito. So, what have you learned from your own ego throughout your 50-year business career about, helping guide the right decisions?
Well, it's, as you noticed, it's trial and error, and probably too many errors for sure. But the thing that I find is probably most often the case with successful businesses is the owner or owners add significant and peculiar value to that business. And, if you want to get into a business, I think this is in my 10 biggest business mistake books, getting into a business where you're not the best player at the top position or the second best player at other positions, key positions in the company, it's likely, you might be successful, but you won't be as successful as you should be. And what my brother and I, as a lawyer and a CPA, why we thought we knew more about the chemical business, I don't. I mean, I think it was, everybody's got that Forbes magazine moment where they think they're going to be on the cover. And maybe there's these two chemical engineers had us convinced that they had invented, something that was really great. And to your point, I discussed it with somebody who had worked at a major chemical company, and he called it Pookie. Everybody's got better Pookie than the other guy, and don't believe any of it. But to your point, I thought, well, no, he doesn't know anything. And so, and I guess listen to the experts, because they didn't get that way by being stupid. So anyway, I think I've quit doing that, but we'll see. Maybe, yeah, I think so.
Yeah. Well, I was going to say, the businesses that we work with and that you coach, I think benefit tremendously. I think it's far and few anymore that you see business owners who have the scars of running multiple businesses and being the kind of liaison or the consultant in the room who's able to cut through the noise and help make better business decisions. I'm thinking of the one where, they had an SEO problem, and you walked in and their sales were down, and you said, well, you just redid your website. Boom. It was your SEO. That was the driver of the decline in revenue there.
Yeah, that was a huge mistake.
Getting the right people in, and you being that kind of voice of reason and wisdom, I think is huge.
Yeah, I think I meant
around here.
Yeah, well, you talk about the road to wisdom, and I think that's one of the things that my brother said is nobody over 50 years old really works anymore. They just exercise judgment. And at the time he said that, I was way under 50 and he was over 50. So I thought he worked pretty hard, but maybe he didn't. I don't know. But you start off as a blank slate, and then you hopefully you get some education, which is critical, right? Then you with that, you couple that with experience, and then by that time you got some valuable knowledge, and then you apply that over some period of time, and now you've developed some judgment. And I think moving from now that you've got judgment, you can help people and yourself make wise decisions, but you got to go through that continuum. And I think I've been through the continuum personally, and I've been through it vicariously with my client base. And then particularly the for-profit firms that I've been on their board, and both of them, I was there when they started up. One of them is now a $700 million company, and the other one is a $70 million company. And they started as tiny little companies. I hope I was able to help them grow and avoid mistakes, but they've certainly helped me do both. So, it's great to see, and you can learn best practices without making all the mistakes. Is that fair?
That's fantastic. And then the final question, and maybe you already answered this one, so I'm kind of curious. If there's one piece that you would leave our listeners with as the one piece of advice to carry with them through their personal and professional lives, what would it be?
No, I think you hit the nail on the head. Be a continuous learner. What was important and valuable yesterday is not going to be important and valuable tomorrow. It just pays to be curious. And in the book, I mentioned that curiosity is a superpower. And usually what you find with people who are dissatisfied with their job, not doing a good job, or looking forward to retirement immediately, is they haven't pushed themselves beyond what they did when they first got into the job, whether that's accounting, tax, law, whatever it is. If you're still doing the same thing that you did 25 years ago, I hate to say it this way, but shame on you. You should have been constantly adding new arrows to your quiver so that you wouldn't be bored, and you're continuing to add more value than you did the year before. So that would be my bit of advice. And I know that you are a voracious reader and consumer of all sorts of information, arcane and otherwise. So we share that. I think you more than me. But anyway,
just dinner facts. I was just dinner facts. What you go to dinner with friends. What are you going to say that might be interesting that they can take away? Well, Pat, this has been fantastic.
Thanks. Been fun.
I appreciate this. Tune in next time to our next episode, where we're going to have a roundtable with all the advisors on the Concentric Wealth side, kind of a quick speed dating session of all the interesting topics that are coming up in meetings. And we're looking forward to having you on the next episode. Thank you again, Pat. We'll see you soon.
Great to be here. Thanks, Matt.
Please stay tuned for all of our disclosures. Securities and advisory services are offered through LPL Financial, a registered investment advisor, member FINRA, SIPC. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations to any individual. To determine which strategies or investments may be suitable for you, please consult the appropriate qualified professional prior to making a decision. Any guests and their companies on this show are not affiliated with or endorsed by LPL Financial or Concentric Wealth Management unless otherwise noted. Individual tax and legal matters should be discussed with your tax or legal professional. Any economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical, and there is no guarantee of future results. Any indices mentioned are unmanaged and may not be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal.